The S&P 500 is down more than 18% since January, and the sharp decline is mounting fears in the minds of investors, especially with the repeated increase in interest rates by the Federal Reserve. And this could be another reason for stock expert Michael Blurry to become even more bearish on the stock market. Hey guys, welcome back to Everything Tesla Stock. Since Tesla stock is vulnerable to the volatility of the stock market, it's expected that the stock price drops every once in a while. However, with the recent struggle with inflation, big short investor Michael Burry thinks that stocks are going to do more than just drop, and the stock market may likely crash in the coming months. According to the hedge fund manager, he expects higher than usual inflation in the months ahead as geopolitical tensions and supply chain disruptions shake the economy. He stated that while many companies are going to be doing their best to scale up profit margins, the worst is yet to come. Why is Michael Burry saying this? And what should Tesla investors expect in the coming months? Keep watching to find out, but if you like this type of content though, don't forget to like and subscribe and turn on notifications to keep up to date on everything going on with Tesla. Popular stock expert and Sion Asset Management founder Michael Burry stated earlier this year that he expects inflation to last for a long time. Probably years. He stated that several analysis predictions for the year are too rosy, as companies' reduced earnings could lower stock predictions and prices in the long run. In 2021, he predicted a possible collapse in the stock market and warned investors to be ready for a historic crash. He had cautioned investors to not be swayed by the fear of missing out, as it may likely end in disaster. And now the fund manager has said in a recent tweet that he believes the fierce collapse is now in full swing, adding to his list of correct predictions. According to the stock expert, restructuring the global supply chain is the driving force behind higher prices, and stocks could be only halfway to their bottom. He believes that inflation is yet to reach its peak, and this may be true seeing that the inflation benchmark rose 8.6% till May, the fastest growing rate in 4 decades. Also, the reaction to the rising inflation showed the Federal Reserve increase interest rates by 75 basis points, the biggest single increase since 1996. It did the same in September, which is the 5th straight increase to the federal funds rate, bringing it to a range of 3 to 3.25%. According to the Federal Reserve Chair, Jerome H. Powell, inflation is gradually reaching an unbearable level, and without proper measures, could become entrenched. The FED plans to slow price growth by reducing spending and allowing demand to match supply. According to Michael Burry, there are several experts who agree that inflation is not likely to end soon. Chair of Gramercy Funds Management and former Chief Executive Officer of PIMCO, Mohamed El Arain, recently stated that he thinks the United States could soon face stagnation, and the challenging economic scenario where inflation remains high while economic growth sputters. It was last experienced in the 1970s. So is Tesla on its way to a future market crash? Well, not really. Tesla reported adjusted earnings of $2.27 per share on $16.93 billion in revenue in the second quarter of the year. The automaker's margins dropped to 27.9%, down from 32.9% last quarter and 28.4% a year ago. The drop was largely caused by inflation, as the cost of production soared in these months. It was also attributed to more competition of EV components. Burry recently grew more bearish on Tesla after one of the car maker's battery packs was involved in a fire-related mishap in California. The Megapack battery, which can store energy for later use or outages, was commissioned by PG&E in April. Burry shared details about this in a CNBC article. Following that incident, the California Highway Patrol closed a section of a nearby highway for several hours until that fire got contained. Reacting to the incident, Burry tweeted that although he is not betting against Tesla right now, he sees a compelling case to wager against the car company. He tweeted, "If I'm tweeting this, you can bet I am not short it. But I should be." Tesla Megapack battery caught fire at PG&E substation in California. The stock expert is known for putting big shorts on Tesla stock. He gained more popularity after predicting and profiting from the mortgage crisis that led to the 2008 crash, and is still a big short investor of several stocks. Many other investors also short stocks in the stock market. Putting it into simpler terms, this means when an investor borrows a stock, sells it, and then buys the stock back to return it to the lender. Short sellers like Michael Burry are wagering that the stock they are short selling is going to drop in price, and if it does drop after selling, the short seller buys it back at a lower price and earns a profit. This is one way experts make money in the stock market, although it is an advanced strategy that is only used by experienced investors and traders. Now, back to Tesla. Investors short Tesla stock with the hope that the stock price will drop, although it may be quite expensive to short Tesla stock since the automaker is constantly exceeding market expectations. A lot of stock experts are still betting against the stock. Tesla was previously rated as the most shorted stock, with its short bets reaching $1 billion against the EV maker. However, it lost its infamous crown to Apple, as the short position on Apple's stock recently rose above that of Tesla. Tesla stock has held this top spot in the short interest league tables for 864 days, almost 2.5 years since April 2020. Although Apple stock interest and short interest rose to $18.44 billion, with 112.86 million shares shorted and 0.70% short interest percentage of float, ranking higher than Tesla's short interest of $17.44 billion, 57.30 million shares shorted, and 2.19% short interest percentage float. Although Tesla is no longer the most shorted stock, Elon Musk still warns about the betting against Tesla in the stock market. The Tesla CEO shared in a tweet back in 2018 that a next-level short burn of the century will be experienced by those betting against the car company, and it did eventually happen in 2020. Likewise, he sent the same warning in 2012, predicting a tsunami of hurt for shorters, and during the following 12 months, the stock price increased by 461%. Tesla has been the target of some of the other high-profile short sellers aside from Michael Burry. Stock experts like Jim Kanos and David Einhorn have at one point in time bet against Tesla stock. However, with several experts which have shorted against Tesla stock, they have all made terrible losses from these moves. According to research group S3 Partners, investors who are betting against Tesla are headed for a short squeeze hell. In July, Tesla stock shorters lost about $1 billion as the stock rallied after its second quarter earnings report. Following the production of records at Tesla's Vermont and Shanghai factories in June, Musk stated that Tesla's got the potential for a record-breaking second half of the year, and his optimism seemed to have helped drive the price of the stock. Not only that, but the short seller covering also further increased Tesla's stock price. This happens when investors who are bet against Tesla, or a stock in general, snap up shares in the open market to close their losing positions. It's not the first time that Michael Burry has been bearish on Tesla stock. Last year, the hedge fund manager revealed in a regulatory filing a short position against Tesla worth more than $500 million. According to the filing, as of March 31st, Burry owned 8,001 put contracts with unknown value, strike price, or expiry. He had long put against 800,100 shares of Tesla worth $534 million by the end of the first quarter. The Sion Asset Management founder also had a short position in Tesla sometime during the third quarter of 2021, in the form of put options equating to 1 million shares. He also sold out of its positions, keeping just one stock in his portfolio. The short investor tweeted at the beginning of last year that his last big short got bigger. In December, he disclosed that he was shorting Tesla and called for Elon Musk to capitalize on Tesla's stock price. Burry believes that markets are only half done with the losses, and that Tesla would suffer a similar downfall. His belief may have been further strengthened by the constant increase in interest rates by the FED. Michael Burry has constantly shared his opinion about the looming effects of inflation, and since the stock expert has a history of making precise predictions, investors may want to give some attention to his comments. Also, the stock market is experiencing increased volatility, so investors do need to keep a focus on companies with strong cash flows and competitive advantages if they plan on securing their investments. But what do you think about his prediction? Do you think that Tesla investors should be worried about a bigger crash in the stock market anytime soon in the future? Let us know down below. And if you want to know what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.